Alright, this is it, the final video. You've learned everything about validation. And now comes the real question. Should you actually trade this thing? This video is about making that decision. How to set risk and how to know when you're ready. And how to know when you're not. Let's get into it. Before we talk about risk, let's make sure your system passed everything. First, out-of-sample performance and commissions included, obviously. Did your system make money on data it never saw during optimization? Second, stability. Did nearby parameters also work? Third, trade count. Do you have at least 100 trades in both in-sample and out-of-sample? And fourth, risk-reward structure. Look at your average winning trade versus average losing trade. Ideally, your average win should be 2 to 3 times larger than your average loss because live trading has slippage, liquidity issues, and missed trades. But that buffer protects you. If any of these fail, stop here. Go back and fix the strategy or find a different one. Okay, so your system passed everything. Now, how much should you risk? In TWM, you set position size as a fixed value. 1 contract, 0.1 Bitcoin, whatever the unit is for your instrument. And here's my recommendation. Start with the minimum allowed position size. Whatever the smallest tradable unit is for your instrument, use that. For Bitcoin futures Bybit, it's 0.001. So I'll go with that. Okay. I'm serious. You should have the absolute minimum. Why? Because backtests are optimistic. Even validated backtests. The market you're about to trade is different from your test data. It always is. Let's look at the results. Say the backtest shows minus $7,000 drawdown. You might think, okay, I can handle that. That's wrong approach. Expect your live drawdown to be 2 times your backtest drawdown. In our case, we should expect $14,000 drawdown if we trade it with position size of 1 Bitcoin. If our intended size is 0.1 Bitcoin, then the drawdown would be divided by 10. And yeah, that sounds conservative, because it is. The goal isn't maximum profit right now. The goal is to see if your system behaves like the backtest, and if it does, you can scale up later. Here's what to watch during your first 30 live trades. In the strategy performance window, when you have your system live, you can select real time and you'll have all the data needed. But I'm gonna show you on historical data. You'll get the point. So first you should look at win rate. Is it close to your backtest? If backtest showed 54% win rate and live performance shows 47, that's within a reasonable range. I would say it's okay. But if you had 30% win rate, something might be wrong. Now, 30 trades isn't much statistically, but it's enough to see potential problems. You may want to hold on scaling up, gather more data until it converges to backtested results, or if not, you just abandon it. Then you check average trade. If backtest showed $20 average and you're at -5, that's another red flag. And max consecutive loss. Are your losses clustered or spread out? If you're getting hit by 6 losses in a row, when backtest showed max 3, pay attention. But also, don't panic over small differences. Markets are noisy. You're never gonna get 100% match. But you should look for patterns, red flags, and always be cautious. And here's the thing. The first 30 trades aren't about making money. They're about validation. You're testing whether live matches backtest. Okay, this is the part nobody wants to talk about. When do you turn it off? You can have different rules. For example, you can have a hard stop if you hit 2 times of your expected max drawdown. So with the backtested drawdown minus 7,000, we should expect 2 times of it, which would be 14,000. And hard stop would be 28,000 loss. When strategy has this big of a drawdown, something is fundamentally different. And I know, this is painful. You put work into this system. But cutting losses early is how you survive. Also, you can have soft stop. For example, consistent underperformance. If after 50 trades you're significantly below your backtest expectations, take a break. Review what's happening. Maybe the market regime changed. Maybe your edge is fading. Okay, what should you not do? Don't turn it off after 3 losing trades and call it broken. That's noise. Don't keep running it past 2 times drawdown hoping it'll come back. That's gambling. There is a difference between giving it a chance and denial. The discipline to stop is as important as the discipline to start. Now the good part. When do you increase position size? First, you can start after 30 trades. If performance matches backtest within reasonable bounds, you can set 50% of your desired position size. Meaning, if your final goal is 0.1 position size, you should trade 50% of it, which is 0.05. And after another 30 to 50 trades, if still tracking well, you can get to full size. And if you scale up and hit a drawdown, scale back down. Don't fight it. Protect your capital first. The market will always be there, but your capital may not be if you're reckless. Oh, and I almost forgot one more thing. TWM lets you run simulations outside of out-of-sample testing. Let me show you what I mean. First, we need to go to period constructor and add more periods. Just click add button 3 times and you're gonna have 3 different periods with overlapped in-sample and unique out-of-sample datasets. Click OK, run optimization. When we don't have a specific period selected, we see the results from every out-of-sample dataset included in our periods. But if we do select specific period, besides in-sample and out-of-sample testing, we have simulation testing, which shows us performance tested on dataset after out-of-sample period until current day. For the first period selected, we have out-of-sample starting from 19th of March 2025 up until 6th of July 2025. Simulated dataset starts from 7th of July 2025 up until 12th of February 2026. We can see it here as well. And total has it all combined. And it goes for every period. You can also save this optimizer result. Just click Save Results button, give it a name, and it's gonna appear in database right here. So if you need to restore your optimizer results data, you just double click on it. And it's gonna open the saved result with all configurations and parameters. You can also export this data, give it a name, and share it if you need to. Anyone that has this file can easily import it. Just select this file, click open, and you're gonna have it right here. When going live, start with minimum position size. First 30 trades are for validation, not profit. During live, monitor win rate, average trade, and drawdown pattern. Compared to backtest constantly. You should only start scaling after 30 plus trades and if results match expectations. Also, you should scale back on drawdown. Alright, and that's it. You came into TWM 105 with a question, is my backtest real? Now you have the tools to answer it. You know that peak results lie, and the best looking backtest is often the most dangerous one. Most traders never learned this. They optimize, they go live, and they blow up. But you're different now. You have evidence-based validation. That's TWM Essentials 105. Thanks for sticking with it. Now go validate your systems. And if they pass, trade them with confidence. And with that said, see you soon.